Here, we are in your corner. Welcome back. I'm Walt Kane. We are in your corner on News 12 New Jersey. For years, car insurance has been an expensive headache for lots of New Jersey drivers. It was issue number one in the McGreevey-Whitman gubernatorial race. Changes in regulations have been happening since then, one just as recently as last month. But some say the changes are leaving some drivers out in the cold. Here to talk about this is Eric Poe, Chief Operating Officer of Cure Auto Insurance. Also with us, Magdalena Padilla. She is the president of the Insurance Council of New Jersey. Thanks to both of you guys for being with us. And Magdalena, why don't we start with you? Let's talk about these change in regulations and what it means for drivers.
Well, fortunately for New Jersey, since 2003, the auto reform efforts have left consumers today in a better position than they were 6 years ago. We currently have over 60 companies writing automobile insurance policies in New Jersey. That was not the case during the dysfunctional market. You correctly noted that there was a time when auto insurance was a real problem for consumers. That's not the case anymore. We have a lot of proof of that. Advertising has increased along the Garden State Parkway, the New Jersey Turnpike. Consumers hear about advertisements on the radio. They see advertisements in print media. The competition is good for consumers. It's good for two reasons. It gives them an opportunity to get great pricing, fair pricing, and secondly, it gives them a chance to see a competitive market, diversity in the marketplace. So when consumers don't like what they're seeing from one company, they could shop around and go to another.
Eric, these changes, though, have brought in some changes in the way policies are written that your agency in particular is not happy about. The ability to choose rates based on things like college education, occupation, that type of thing.
Right. So during the 2003 Reform Act, some insurance carriers came into the state and they started using credit scores, education level, and occupation. And although there is more competition, a lot of people could argue it's better for certain people, but not necessarily better for others. There's been statistics that show that indicate the uninsured motorist population is growing throughout the country as these socioeconomic rating factors have been proliferated through the use of industry practices.
I want to do a comparison here and show you the old Consumer Bill of Rights and the new one. And I'm going to begin by showing you the Auto Insurance Consumer Bill of Rights. This is prior to the changes that took place last month, January of 2009. They state you can never be denied auto insurance based on your gender, race, or ethnicity as long as you are an eligible person. Now, after January 1st of this year, the Bill of Rights changed to say you can never be denied auto insurance based on your gender, race, or ethnicity as long as you meet the company's acceptance criteria. Eric, does that indicate, in your opinion, that now you can basically use these factors?
No, I don't think that those factors could be used. I think, though, the factors that can be used, education, occupation, and credit scores, they could have some sort of proxy effect and reach certain races or ethnicities indirectly.
Why credit scores, education level, why do those things matter, Magdalena?
What matters is this. Consumers are not interested in complicated programs or technical terms. They're interested in competition, pricing, and choice. The competition may not be something that some companies like, but consumers do. So at the end of the day, what consumers are looking at is, where can I get the better price? Companies are fiercely competing against one another through advertising. Many times consumers receive unsolicited mail. That didn't even used to happen before.
And you don't think that the consumer matters ultimately or cares how it is that they're rated as long as they're able to get competition and shop around?
Well, let me tell you something. There is no business plan in the world that would work if the consumer is ignored. At the end of the day, it's the consumer that is mattering for each and every one of these companies, because each and every one of these companies is competing for the same policyholder in New Jersey.
Now, Eric, obviously your company believes that consumers do care. You've run that ad campaign featuring the little blue smiley face that says those things should not be used. But, you know, here's the flip side of it. If you're a young driver, you obviously pay much more than an older driver because young drivers are less safe than older drivers, kind of inherently.
Right.
If the credit scores indicate that people with a lower credit score are unsafe, or if educational level indicates that, why shouldn't those be used also?
Well, because the indications that they've given as an industry as a whole is a profitability correlation, not necessarily a riskiness of driving. So in other words, most of the reports that show that there are correlations to somebody's education level or occupation or credit scores usually show a correlation of profitability. But profitability doesn't necessarily mean risk. And the difference between age that you bring up is that everybody has an equal opportunity to get older. Not everybody has the equal opportunity to afford a four-year college degree or a master's degree. And when you look at education, there is a strong correlation to income, and that's really why I think this is a big issue for the state of New Jersey.
So, Magdalena, Eric seems to be saying, look, these test scores or these credit scores don't indicate a safer or unsafe driver. It's strictly a question that they indicate how much money can the insurance company make off them. Is that accurate?
No, it's not accurate. And also, it misses the point, because the point in competition in New Jersey is, what do consumers want? They want a diverse marketplace. If a consumer does not want to be credit scored, they don't have to. They can shop for a company that doesn't do that. Some companies advertise on the fact that they don't use this program. Other companies do, and they advertise on that as well. And consumers like the diversity. They like to be in control, like to be able to say, in New Jersey, I can now shop.
And Eric, that's an interesting argument. Obviously, you can shop around, you can pick and choose. Your company is openly saying, hey, we don't use any of that stuff. We only care about how good a driver you are. So what's wrong with allowing that choice?
Well, the problem with that choice is the fact that it is very easy to determine that higher income drivers do actually give better profits for the insurance industry. And what ends up happening is, yes, there's competition, but where's the competition for the person who doesn't have a four-year college degree but is a great driver and hasn't had an accident in 25 years? They're going to be choosing between 30 different companies that all charge higher rates because they don't have four-year college degrees. So, yes, competition's great. The problem is, where's the public policy line drawn? And that's where the legislature needs to step in.
And Eric talked about before, Magdalena, about how you might have a spillover effect. As someone who grew up in Brooklyn, I always paid a higher rate because cars were more likely to be stolen there, and you're more likely to have accidents there. But there was a lot of controversy in the 80s about redlining, saying that by doing geographic boundaries, you had discrimination against African Americans, discrimination against other minorities. Is there a concern that this type of thing, where you're discriminating, where you're choosing based on income or ethnicity, could wind up being discriminating against ethnicity? There's
always an interest in New Jersey to make sure that we take all the steps possible not to go back to a dysfunctional market. That does not mean that consumers don't have consumer protections built in to this competitive marketplace. In fact, the Department of Banking and Insurance has done a stellar job in raising the interest of consumer protection for all policyholders in New Jersey. One of the things that they had done was introduce the Consumer Bill of Rights, which was implemented in the auto reform law of 2003. And remember, of course, that was 6 years ago, and we are today in a better situation than we were 6 years ago. The second thing the Department of Banking and Insurance continuously does, not only by itself but with the industry, is monitor and research the changes in the marketplace so that we can ensure that we maintain our competitive edge.
All right, Eric, give you the last word here. Are we better off than we were 5, 6 years ago?
I think in different perspectives. I think the question is, what segment of the population is better off? And one thing that I have to point out is that, what is considered dysfunctional? Massachusetts, the industry believes, is dysfunctional because there's not a lot of competition, but I can tell you it is one of the lowest uninsured motorist populations. So it depends on what you consider successful, because you mandate insurance in the state of New Jersey.
Magdalena Padilla and Eric Poe, thanks both for being with us. So appreciate it. Up next, whether you owe